Today's June the 19th, 5 p.m. special meeting of the Floresville Economic Development Corporation. Mr. Gonzalez, would you lead us in prayer, please?
Please stand. Heavenly Father, once again we invoke your name as we work on the city's business. First and foremost, as always, we thank you for your many blessings, and we ask that you be with us always, that you give us the wisdom and the knowledge to be able to make decisions that are fruitful for Floresville, and that always keep in mind that we are doing the best we can, and that what we do will benefit, hopefully, the city as well as the citizens. We ask all of this in Jesus' name. Amen.
Amen.
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
On Texas flag, I pledge allegiance to thee, Texas, one state, under God, one and indivisible.
Thanks for being here at 5 o'clock. I know everybody has a very, very busy work schedule. So around the conference table is Mr. Padilla representing Sylvia Rodriguez, our interim and city manager, Henrietta Turner, Mr. Jake Gauna, Mr. Fred Gonzalez, Mr. Roy Idrak, Honorable Mayor Sherry Castillo, Mr. Ben Reed. Also with us is Ms. Frazier representing the Peanut Festival, Charlotte Jimenez, Nelson, our assistant, and accountants from the firm of ABIP. We've established a quorum. And we also have Wilson County News with us, and also, I'm sorry, I didn't see Connie over there, Connie Moreno, city staff, comptroller. Any citizens' comments? If not, we're going to go on to approving the minutes. You have your packets, item 1A.
Are you ready for a motion?
Yes, sir.
I move that we accept the minutes special meeting on June the 10th as presented.
Second.
Motion by Gonzalez, second by Gauna to approve as presented. All in favor say aye.
Aye.
All opposed, motion carries. 1, 2, 3, 4, 5, 5, 0. Okay, I'm gonna
I'm sorry, who made the motion?
Gonzalez and then Gauna.
She stepped out the room.
We have with us today Ms. Frazier, the president of the Floresville Peanut Festival Association. And for those of us who've been on the FEDC many, many years ago, probably maybe 15 years ago, the city established a relationship, a stronger relationship with the Peanut Festival. We started doing banners. Remember that, Fred?
Yes.
We started doing advertising in the San Antonio through billboards. We felt that the Peanut Festival was a way to bring visitors into our town. They're here again to try to renew that type of relationship with us. Ms. Frazier, is that correct?
That's correct.
Okay, if you want to tell us what it's going to cost and what...
Okay, it is it's a large billboard. The finished size is 13 feet by 41 feet. Last year we had it at Military Drive area. As you were headed south, it was very visible. You could see it. And it has the Floresville Peanut Festival Association logo, the City of Floresville logo, and it's got all the maybe hotels and motels listed across the bottom of the sign. Of course, it's got the date, and encouraging people to come to the Floresville Peanut Festival Association. And the cost of the sign is $1,100. We work with the city on the design, and we're in the process of doing that right now. And so that's what we're looking for a sponsorship for that sign.
How long does it run?
It was up a long time. I couldn't tell you how long, but it was months.
Like right after the Freedom
Right
Fest?
after we do Freedom Fest, then the Peanut Festival goes on and it stays there until after Peanut Festival. So the city of Floresville rents that billboard right now. We have that billboard, and so the cost is the artwork to change it. Every time you change it, it's $1,100. And so I think that's what the treasurer's asking for. So we don't let a lot of people up on our sign, just to let you know. But our Peanut Festival, of course, is always accepted to the rule, but normally it's advertising something for the city. And so right now it has Freedom Fest on it. It's coming up at the end of this month. When that comes down and their artwork is ready, then we'll be able to put that up. It's on, and that's 37, right? Highway 37,
Right.
coming towards the city. Right.
I have a question.
Yes, ma'am.
Do we have a float in the Peanut Festival, the city? Or
I guess we
EDC?
could, right?
Do we? That's part of marketing and advertising. Why don't we do that? Free? It is free?
There's no entry fee for the parade.
Okay.
The city normally has vehicles that drive. Elected officials don't always like to ride together, so we have several entries that ride for the city. The city doesn't have to float, but usually some of the elected officials will opt to have a car and ride in there.
But EDC, do we have one?
I have not, since I've been here, and it's only been 5 or 6 years, I have not seen EDC participate either via vehicle or float.
Well, I would like to ask our future executive if that would be a.
That'd be something we
would
could,
like to do.
oh yeah, I'd like to do that. I mean, we can talk as a board. I think it'd be something we could get on and have a trailer and. pull
Trailer?
Pull in the back, you know, we can decorate a trailer, or you can bring cars individually.
You learned about a
Hey,
picture tonight.
you wanna,
trailer.
the one they know we did in the past, you know, we
Oh, yeah.
could come up with something on a trailer and
Okay.
design it
That would
and
be good.
decorate it, and, you know, we can
But-
sell as a board.
What's the latest that we?
You know,
sign up?
I don't know, but it's,
Mhm.
we have the entry online now, and
Okay.
Martha Castro is our new parade committee chair, and so I can certainly get all the information you need from her. And I can follow up.
Mr. President, I would like to ask for us to research that, Mr.
For the float?
Yeah,
Okay.
either a float or whatever.
I'll get that information for you.
All right.
Let me read you some minutes from 2005 that I was just handed. Jesse Bettis stated that given the change of the law, the FEDC is limited as to what it can assist. However, tourism, promotion, and revitalization of the downtown area is the goal and objective of the FEDC. In this regard, the board can seek ways to work with the Peanut Festival Association. Mark Mitchell moved that the FEDC support the marketing and promotion initiative of the association and appoint Jesse Perez as the FEDC representative to work with him. The motion carried unanimously. That was back in 2005.
And this is what we had last year, and it says very boldly, Historic Downtown District, and it's got the City of Floresville logo.
And you're still working on the design right now?
Yes,
correct?
we are. Of course, we're gonna have something indicating the 75th, since that's a big deal for us this year.
Yeah,
Maybe get the EDC logo on there with the city somehow.
Well, if you sponsor, of course. I
Yeah.
think they can get it. Now, the hotels are on there because I think Peanut Festival has agreed when they took over, when they received money from the hotel motel tax, that they would definitely advertise all the hotels. And so the design's really coming not necessarily from the city, it's really from the company, those Piscos and all those other kind of things. They have to design the sign for that size. And sometimes you just can't take a simple flyer and blow it up to that size.
And of course, we do feature our sponsors elsewhere. They're on our website, they're on our poster that we're in production right now. They're cutting me off on that at the beginning of July, and so Any sponsors that we get after the beginning of July, we won't be able to put on our poster, so timing would be really good.
And just last Thursday, the Peanut Festival Court, what is the name of the court this year?
The Court of Bejeweled Brilliance for the diamond, and they're
I'm
all,
so glad you said that.
they're all
Yeah, they
gem
got
cones,
jewels on there.
and
So
the
they
queen is the
presented-
diamond.
So they presented that to the council last Thursday, and they were approved for the parade and closing of the roads. So here we go.
This isn't shown as an action item, right? Is it? Do we need action on it? On the approval of the amount?
It isn't an action item.
For the Peanut Festival Association sponsorship?
It's not an action item.
It's not an action item. Nope.
Here, Mr. President, if I
Yes.
may, I would like to do this. We have time to do it. I'm listening here, and I've always been supportive of anything that helps Floresville. I would like for us to do a couple of things, though, and I think that our ED and our attorney should do that. Let us, first of all, make sure that we can do this, we can expend money on this item. I think we can under promotional budget, but we have to make sure that we have it in that particular budget or make amendments or whatever. And then the other is to make sure that we have an action item so that we can vote for it. Thank you.
At your next meeting, have you got any discussion or?
It'll be at the
July.
July 8th?
Will that be too late?
Yeah, because they have the thing before July, so if you have a consensus, can we get on your promotional material then? If you don't-
Well, you could be reimbursed also.
Send me your logo and we'll work with that.
Okay.
The city is already promoting or spending some money on the
Yes.
hotel tax. What was the amount on that?
It's 35,000 and it is, but it's paid post-event, so
Right.
that's a little different for us this year, and that's why we're doing everything we
Yes,
can,
that's
especially
what it
with it
should
being
be.
the 75th, that we do our due diligence and fundraising
Yes, ma'am.
so that we can make a good show of our 75th here.
Yes, ma'am. But again, like they, we have a certain requirement that we have to follow. I think we can do it post-event, you know, but we do have to have an action item before we can vote. And I don't know unless you want to call a special meeting for that.
We'll see.
Well, I appreciate
I
your.
would say,
Tell me.
write the check and we'll have a meeting afterwards.
Now let's put it out of our.
You didn't hear that? You didn't hear
You
that?
shouldn't say that right now.
Connie, step out of the room.
No, it's not.
The guys in the 3 seats right there.
They're here to inspect past history, not you. I'm sorry, we'll do it right.
Certainly follow the process that you need to follow. We appreciate your consideration. If you will send me your logos, and we'll have that on file.
Okay.
And we will appreciate anything you can do to help us make the 75th festival memorable and fantastic.
Okay, thank you very
All
much.
right, thank you
Thank you.
all, appreciate it. Thank you, thank you, thank you.
Your meeting in July
It's the second, it's
Second Monday.
is, that's the 9th.
the 8th.
Monday
The 8th, yes, July the 8th.
Okay. Item 2B, ABIP, CPAs and advisors will present their audit report for the year ended September 30th, 2018.
You want that one in, Mike?
Yeah, I think I will, because since I'm gonna have to flip through some pages here.
What should have been an action item?
I'll walk around the room too, if it's all right with you guys. Anyway, thank you for having me here. My name is Mike Delcore, with ABIP. I'm joined by my colleagues here, Jeremy Pittman and Scott Woodland. A couple of months ago, your former director thought it was important to have your own financial statements and your own separate audit, separate from the city. And so we went into an agreement, I think it was sometime in March, to conduct this separate audit, to issue you a separate report. I think we did it back in 2015, right before we were going out for some financing. We did a separate report, but that had not been done in a couple of years. The last couple of years, it's been just a component of the city's report. So what you have in front of you is the financial report for the EDC, and we'll go through it, hopefully not as slow as we did last night, the city's report, but we'll go through this so that you understand the contents in there, since as a group you haven't seen your own set of financial statements in some time. Overall, the audit went well. We do have some comments and some things that came to our attention that are important for you guys to know about. I've certainly discussed them with Connie and Henrietta, and hopefully they've kind of cued you into one of the major problems that we had. I made it known at the time we were aware of it that it's best if you find out about it sooner rather than later, because we're going to come to you with the finding that we came up with regarding the severance package that was paid out to your previous director back at the end of October or late September, early October. So that will be included in some of those stapled documents. Right now we'll go through the thicker document, the noun document. This is a draft. We'll talk about what's open in there, why it's just a draft. Usually I like to come to these committees, these board meetings with drafts so that you know you have an opportunity to review and have comments before it goes final. Because if not, we're showing you a report that's signed, sealed, and delivered, and sometimes boards feel like, well, where's my input in this? So that's why this is a draft. And if we turn a couple of pages, we'll go to the independent auditor's report. It looks like this here. It basically says what our requirements were to perform. We were engaged to perform an audit in accordance with generally accepted auditing standards of the United States and government auditing standards. With the objective is to opine on whether the financial statements as presented are in accordance with generally accepted accounting principles. If you turn to page 2 at the very top, we spell it out for you. That's our opinion paragraph, and we say that we do find the financial statements to be in accordance with generally accepted accounting principles. That's not to say we didn't have comments or findings. It just means that the document that's prepared and is going to be issued meet standards for generally accepted accounting principles. And that's what we call an unmodified opinion. It's a clean opinion. Turning to page 3 is a management discussion and analysis. And this really shouldn't come from us. It really should come from management. They should put some information here. But this is a verbal description of the results of your financial statements. I won't go through this in detail, just so you know what's there and why it's there. It is a requirement for GAAP financials for governments to include an MD&A, and that's why it's in there. You'll have some comparative information. If you turn to page 3A, you'll see the comparative information last year to this year's, and then some information on your capital assets and long-term debt. As far as MD&As go, this one's pretty bare bones. I've seen much more expanded versions of the management discussion and analysis. Obviously, because this is your first report in some years, it just hasn't been done, hasn't been honed into the level maybe that you guys would like to see. If we're going to continue to issue a report, I would say beef it up. If this is going to be a one and done, I'd say just leave it the way it is.
Say that again?
If this is a one and done presentation report for the EDC, then don't worry about it. But if you're going to continue to issue your own separate reports, then I'd take a look at this and beef it up maybe for next year. That makes sense? Yes. Because, again, where is this going to go? It's probably going to go to users, probably maybe a promotional package. I don't know what you would be using this report for, but if it's for promotional purposes, beef it up, put some information in there that's going to help kind of advertise the city in the EDC. So I say advertise, financial advertising, how we're doing financially, which is so exciting for us external auditors. So, turning to page 7 is the statement of net position for your government activities. This is a full accrual presentation. I want to point out that you don't budget at this level, but this is a required schedule for governments to present this. in this schedule, it's presented much like a for-profit organization. Now, you are a government, and so you don't necessarily operate like a for-profit business. So there's some things in there I want to highlight to you to not be too concerned about. Primarily at the very bottom, the net position, which is your equity in the organization. You see a negative unrestricted net position there. In a for-profit environment, that you might be alarmed by that. Not to be alarmed for the governments. Why? Because your long-term liabilities are not due and payable right now, and it's not based on operations that you're doing. You're going to be collecting sales tax over the next however long those bonds are outstanding. I don't know, 15, 20 more years on the bonds. And so you're going to be bringing in revenues to cover those payments. But at this level, we're presenting a full accrual. We're recognizing those liabilities on the financial statements. We'll look at a couple of pages, your fund level reporting. At the fund level, that's how we budget for the organization. You'll see that we are in a pretty good financial position at that fund level. So, any questions on this schedule? I'm gonna go just flash by the schedule real quick. Page 8 is a statement of activities. This is the income statement. Again, this is at a full accrual level. For your organization, the statement of activities doesn't differ much from your fund level reporting. But I'm gonna table my discussions about the results until a later schedule. So, again, these two schedules are requirements for government reporting, but they are not how you budget or manage the EDC's finances. Page 9 this is your balance sheet for the general fund. The big difference between this balance sheet and the other one we saw, there's no fixed assets on here, no capital assets, and no debt. So what we have on there is cash. You're cash rich. You got $2.3 million in cash. And then you have some sales tax receivable at the end of the year. Because of the timing difference on when the state collects taxes and when they remit those to the communities, there's a lag. And so we recognize about 2 months of your collections as a receivable at the end of the fiscal year. Prepayment, small amount, I think that's for some health insurance or something like that at the end of the fiscal year. So all in all, total assets of $2.5 million. Liabilities, you have some payables, just timing differences on why we were paying things for $35,000. And then we have this accrued expenditures for $56,000. Most of that was the Tommy, the former director, I shouldn't probably say names, but the former director's severance. Because that was in effect at 9:30, we went ahead and recognized it at 9:30, even though we paid it shortly after 9:30. I think 10:01, 10:02, somewhere around there, the check was paid. But we went ahead and recognized it in this fiscal year since it was, all the agreements were signed, done, and delivered before the end of the fiscal year. That number there at the very end there under the liability section, due to the city of Floresville, $295,000. This is the pooled cash amount that has slowly built up over the last couple of years. We went ahead this year, really because some of it was driven by the city. We went ahead and removed those down into a due to liability account for not just the EDC, but for all the funds that owed back to the pooled cash fund. So.
We got it approved, we got it on the side.
It's important to note that's the balance at the end of 9:30. I think it's
There's
from,
Gotten a little bit larger.
yeah, it's increased.
It's a payroll, so every time you have payroll, that number increases. We submit the invoice, but I think Chairman, you said you wanted to wait until you had the audit here, but this is the number that we have to do with last fiscal year. But this is a payroll, so it'll keep increasing every year.
Yes, sir.
So this is service that the city has provided for us and being paid.
The city has paid that for you. They floated you transactions that they paid out of their because you didn't put any money into the pooled cash fund.
Right.
As they were writing checks out of the pooled cash fund,
Right.
they were just increasing this liability that you owed back
Is
in.
it payroll?
Primarily payroll. I think there's some of the debt is paid through there too.
1 year of the debt.
and then just a few invoices, for example, the copier, which now is being separated, the phone bill, the light bill, little other invoices that are commingled together with the city.
Just so you are aware, we did meet with the city last night. One of our recommendations is to undo the pooled cash. That we just operate separate bank accounts because not to get into the specifics, but there are some issues with managing the pooled cash. So we're recommending that they dissolve the pooled cash and just open up separate bank accounts to run these transactions through. Any question? I know that this has been discussions in the past about what this amount is and how we accumulated it. I'll answer any questions that I'm aware of. Some of the detail we have to get from Connie and her staff, and they should be able to provide us detail of what built up that amount to the 295.
We issue an invoice, and on that invoice is an attachment of reports. And I cannot provide you with all the invoices because some of them already boxed, but the more recent years I can go ahead and provide you with.
So this pool cash amount is for more than 1 year?
Yes, ma'am. Mr. Baker, at the beginning, because he started, it was joined with the city in 2013, so he was making payments on a monthly basis to the pool cash, so the amounts were not that high at that time. And then about 2 or 3 years ago, he's completely stopped paying these. And I brought it up to his attention, and he said, yeah, go ahead and send me an invoice. I will send him an invoice. It never got paid.
So did this amount included his salary
Yes.
and the benefits?
Yes.
Almost 40.
So for 4 years?
TMRS, insurance, life insurance, any AFLAC that he.
You know, EDC had the money, why was he never demanded that he pay the full amount?
Usually when I demand things, I'm not.
It should have been brought to the board.
Wouldn't have this been part of the audit before?
It was, so it's part of cash, right? So in the presentations on, and remember your reports were accumulated with the city. In the presentation for cash, we netted that with all your other cash holdings, and so.
They knew we had the money there, so it was explained. So when, I think me and Fred were not on the board at the time, when some of these changes were, we were doing that previously. And then when we got off for a couple of years, then these things occurred and they stopped paying them. So, but what the way it's explained to us is that since we had the money in the bank, they never worried about it. It was kind of a joint audit, so it was never a big red flag for them. I mean, it was more of like a concern or a thing, but since they knew the money was there, they never really brought anyone's attention because they knew we were cash rich. So now that when Johnny came on and came back and was the treasurer, that's something we want to take care of. Only thing that really should stay in that pool account if we continue with the city is whatever salaries we have for the ED and the administrative assistant. Yeah.
Right, now, one of the things that your previous EDC director was requesting the city is to do a separate payroll.
Yeah.
The thing is that we've already looked into income, and it is too confusing for it to do 2 separate payrolls.
Yeah.
And then IMOF and those kind of things only bill us as one group. They're not going to look at us as a separate entity. So we can't necessarily separate the payroll issue. That won't, because if we could separate it, it would take care of this issue, but we can't. So we're going to, I think the auditor suggested that we do, as we pay a payroll, that we invoice you right away.
So then we set up our own account and then we just pay
From a
it.
separate account.
So if we do away with the pooled cash on the city side, then they're going to have to open up an account dedicated to payroll. And before, as the payroll is processed, at that point,
Gets funded.
finance will have to fund from all the separate accounts they have to pay in, EDC being one of them, a transfer out of those funds into the payroll account.
I still don't understand the reason why it was paid immediately, because it's not like the city didn't need the money. So, I mean, to let it go for 4 years, that doesn't make sense to me. Anyway, it's food for thought.
I have a more basic question. You said if we continue with the city, what does that mean?
Well, if they continue like with the joint account, if we don't break it apart and have a,
Is
like.
this an unusual thing we're doing right now?
No.
It seems unusual to us, you know, that we're doing this separately, and I don't know if you have any answer for that, but how did we get from where we were, starting in what, 2015 you said,
Yeah.
to where we are now? Like, are we separating from the city, or what is
No.
it we're?
We're just opening up a separate account for the.
Just for the
pool
invoicing,
tax, for the invoice, right?
the invoicing purposes. So we don't, this doesn't happen again where you don't get behind. So it just
No,
cleans up the
that's good. I
invoicing
mean, I understand
process.
that, but I'm just wondering, you know, it seems like with the audit we're getting right here, that somehow or other now we have a separate entity from the combination with the city.
No.
But technically, you've always been a separate entity. You are a component of the city.
Okay.
But you are a separate legal entity.
So that remains the same.
Yes, that remains the same. Nothing's changed with that. Obviously,
So we're gonna clean house and do it the right way so we don't get in arrears, so.
yes.
That's right. Bills paid appropriately.
Sounds good.
Let me ask a question, please. You said that he stopped paying. And when he stopped paying, did you brought it to the attention of the board or anybody?
Not to the board because I don't attend the meetings. I
What?
really don't attend that.
But something like that, I think that the board ought to be notified either by the city manager, or did you consult with the city manager?
When it became a big amount, yes. And then because we were gonna go ahead and pay it up when she became the interim director of FEDC, and then I said it's gonna be more cleaner if we wait for the new director. So that new director knows what's going on, so that way he can start doing it the right way, like Mr. Baker was doing it.
So how long would it take to produce the records going back to 2013? To see what was
Invoices?
included?
Well, most of
Did
it
you
is
say-
payroll, so for payroll, I can only give reports that the
But you
system
mentioned something about everything being boxed up. What was that about?
invoices. For example, the copiers. They send us one invoice, and in there is the copier included for FEDC. So we issue a check from the city and pay it out to the documentation of whatever company that we have the copiers with. But when we post those payments, they're separated by funds.
So the pool cash didn't just include the salaries?
The majority of it is the salaries. I wanna say about 80% of it.
So,
And
I
what is
mean-
the rest? I'm sorry.
I mean, yeah, because that could be figured out very easily, you know, how much was Baker paying and being paid for in the last, since 2013?
Yes.
And then the difference would have been everything else, I would think, so
Yes.
that might be an important thing to look at.
Yeah, it's attached to the invoice that I provided to the city manager and Mr. Rodriguez back then. I print out different reports for salaries, and in there it explains what salaries, what's TMRS, what is the insurance, and all of those documents.
Yeah.
But what I'm talking about that is boxed is just those small invoices that, you know, we paid for you because they're commingled with the city. Now, for this time, we separated the copier.
Okay. If it was commingled with the city, then wasn't that a pool cash? I mean, it's not clear to me, so anyway. But
Okay, when I said that it was commingled with the city, is that the vendor will invoice one
Oh,
invoice
for both, for all
for
copiers,
everybody.
whatever.
And then we separate it,
Yeah.
and we charge correctly to the expense of FEDC, but the cash was not coming out of FEDC. It was coming out of the pool cash, because the city was issuing the check.
Yeah, okay.
You understand me?
Oh, they were sent out to the city.
Well,
Ask me more if you, I'll answer your
I can't get
question.
into the
So
details of what's in
the
the contract, but
percentage
next week.
on the billing from the copy machine, let's say, if the percentage go to FATC, then you pay for, let's say, with this percentage go to them, so they all.
Right, yes, yes.
Well, actually, they had a copier on their own, and the fee for that one copier and the rental fee was charged to FEDC
Oh, I see, they bill for all of it in one bill.
in one bill.
Even so, they got a separate machine, I got 5 machines here, here's the bill, you work it out how you.
Yes, yes, but we already spoke to the vendor and they separated. So now we get a bill for FEDC and we get a bill for the city.
Yeah.
So that way it's more
That's why
clear.
it jumped to 320.
You were paying the bill, but FEDC failed to reimburse you for the money that you paid.
Correct.
So it keep on accumulating the debt.
Correct.
Hopefully you didn't charge them interest.
Did you charge us interest?
No, of course not.
What Johnny transferred was the parking lot money, the $50,000 for the sidewalk, and $50,000 for the match of the grant. That's what.
You don't send the bill, you cannot pay.
Said 27, that's
You
what he
need
paid
an
for.
invoice.
They never paid.
It was not this.
You need an invoice
It
to
was,
pay.
and he said in the city council
You gotta
meeting,
talk
it
with
was
the money.
27.
227 for the parking lot, $50,000 for the sidewalk,
Because we took
and
action.
$50,000 for the lawn, for the
For the,
landscaping,
for the,
for the parking lot.
Yeah,
That's
Mr.
what it's done.
Mr. Tejada, and on that invoice, I also added the agenda in the minutes where it was approved for, Mr. Rodriguez to pay that amount, but he still didn't wanna pay
You,
it.
you approved it, yeah,
You approved it.
but,
Go ahead, sir.
No, no, no.
you approved it, but the action didn't happen because he wouldn't do it. And I'm not on your bank account. It's income director,
and now that number's gone.
payroll's gonna
So we keep on, it's gonna be $500,000.
Yes.
That's why we need to
Needs to be paid,
pay and get it separated.
get it separated.
And invoice the right way, so.
You took action.
Because what it does, it hurts the city somewhat because of
So
their
what's
cash.
the
flow.
bottom line
you took
amount that
action.
we owe at this point?
295.
295, 203.
No,
So
no,
that's a September
it's like,
30th.
that's about,
It's
it's like,
about 349.
no, 320?
Oh.
349 something. It's on the invoice, because I charge you up to that time that I ran the reports and everything.
So that's
And then
why-
after that, I post the transfer, and then after that, the remainder.
So we can put
that's
on
what
the
we're
8
gonna have
meeting so we have a
invoice.
solid number so we know what we're gonna do.
So when and how can we erase that?
We just have to go down and get a solid number.
But I mean,
Get a,
we can do
we did approval through the 295, so we'd have to amend. I would say to get approval, pay that new amount at our 8th meeting, and just me or Danny have to go down to the bank and make the transfer.
Clean us out.
Yeah, and I would just, that was my concern, we talked the other day about some things that's coming and having it with the new number.
Sure.
Because it jumped up significantly and making sure we explain that new number, so some of the questions you have, like, oh, we had approved to pay the 295, and all of a sudden it jumped up to this.
Yeah.
Maybe the documentation to go with it would help, and that'd give you a little bit of time, I
Now, one
know.
more question, how do we avoid having what we have now?
So,
Invoice regularly.
Regularly?
yeah, so what we
you
do is we
bill us
find
and
out.
we pay.
You find out what your payroll is every month until we can do it, and then you just never keep it at, once you get that, you pay it. He's got an invoice, and we just gotta pay it every month.
And then you ask Charlotte and then the
Gotcha.
clerk to make it on your monthly agenda so that every month you have this invoice, that you have invoices for the city.
And anything over a certain amount with the new things, we just approve to get it paid, and we just transfer it.
And we will invoice you prior month.
Mhm.
So that way you can put it on the agenda for that month and you pay that money. And then on the following month, I'll invoice you for the previous month.
All right.
Okay, go ahead, sir.
Okay.
Okay?
Continuing down on page 9, at the very bottom, we have your fund balance, number $2.1 million. We'll look at a couple of pages. Your expenditures for this past year, $578,000. Figuring out what your average reserve is, that's about 3.5 years of expenses in reserves at the end of the 9/30 fiscal year. That's healthy. That's a very healthy position to be in for the organization. So, turning to page 11, I know we're skipping a page. That page we're skipping is a reconciliation that goes from the fund level reporting to the full accrual reporting. I try to avoid getting into a conversation about that page just because it'll probably take us about an hour and a half or 2 hours to go through the explanation. So, page 11 is the statement of revenue and expenditures and change in fund balance for the general fund. Obviously, the largest revenue source is sales taxes. Just a little bit of audit information for you. We do confirm that. We get a report from the state comptroller's office, so we can tie that number down. So that number is 100% audited in the sense that we tied it down to the penny. Small amount of interest, $623. I think with Mr. Rodriguez, we talked about ways of kind of improving the rate of returns, and there are some options out there for you. Pooled investments, for instance, or the rate of returns are a little bit better. So Something to think about. You can have your money work for you a little bit better than it currently is. I'm not a financial planner nor a financial investor, so take that with a grain of salt, but there are options out there to get a better rate of return than you're currently getting. Miscellaneous, I'm going to defer to my colleague who did the work, Scott Woodman. I don't know what's in the miscellaneous account. That's why we call it miscellaneous. But do you remember what's in it?
The majority of that is money that's received from, I believe that the EDC's renting property is somebody, or they gave them a loan, and then they're receiving payments for that.
And then the FNW, which I
FNW,
think we got the last payment.
Don't we have a loan out there that's being paid to us? That's probably right.
He was the FNW property out there, but I think that he made that last payment.
We should throw it in.
Yo, you throw it
We
in.
approved it.
So I'll drop off this next year.
It's next year.
And if you weren't sure what it was.
Department
The apartment complex pays.
Overall expenditures, we had $352,000 in administrative expenses. Again, the details of that, I'm not specific. Some of that's payroll, obviously. And then debt service expenditures, paying down the debt, $142,000 in principal, and then interest of $76,000 during the fiscal year. Overall, change in net position, or change in fund balance, $300,000. I think sales taxes have been traditionally better than what we're anticipating, that those, I think, even in this current year, are going to continue to rise. Tissue here. So I think in the current fiscal year that you're in, your sales tax are going to continue to go up. Obviously, a sign of the health of the region. So, okay, page 13 starts the notes to the financial statements. Last night I went painfully through those with each one of them with the audit committee. Unless somebody here wants me to do that, I'm going to just highlight the ones I think are important to you guys. Page 15 is the capital assets disclosure. Actually, above that is your depository disclosure. So you have a number of, you're obviously cash rich, but all your cash is fully collateralized at the bank. You got enough collateralization to cover those deposits and the FDIC coverage. Note 3 is the capital assets. So you do have some infrastructure, $1.2 million. I think is that the Civic Center?
No,
No, what's that? It's,
the industrial park.
the industrial, okay, yeah. And then, some small equipment and all that. If you notice there in that second area, the less accumulated depreciation, you'll see that your equipment and buildings and vehicles are fully depreciated. So the only thing out there that's not depreciated yet is the industrial part. So. Page 16, note 4 is the long-term debt. We do have 2 outstanding bonds. The 2017, which were issued last year. I think we recognized that last year. And then the 2008, $1.2 million in the 2007 principal at the end of the year, and $935,000 of the 2008 principal outstanding at the end of the year. We talked about the note receivables when we talked about the miscellaneous revenue. That's note 5 there at the bottom of page 16. You had $11,000 still outstanding and owed to you at the end of September 30th, and then the $65,000 from the Center for Housing and Economic Opportunity. Page 17. About 3 years, 4 years ago, a GASB was issued that required us to report pension liabilities in governments. Hey, you have 1 employee, so we had to put all these disclosures in there for the 1 employee that you had during the fiscal year 2018. That was Tommy, obviously. Anyways, there's a lot of information there. There's an actuary analysis that's conducted. Obviously, your plan isn't commingled with the city plan, and so we just kind of took the city's plan and took some notes out of there and allocated some of the liability over to the EDC based on a per employee. So the 1 employee, we took a per capital ratio of the one employee and moved an amount over. If we turn to page 20, that pension liability amount that we allocated over was $42,000. There's not a science to that. We just said, look, one employee, we weighed everyone the same. Obviously, some employees have higher salaries than others. Unless someone has a better way of doing it, that's kind of been our methodology for doing that. And so it's not an exact science. That may not be exactly what the EDC owes, but it is based on something that we can hold our hat on. So. Let's see. And there's a lot of information here on the retirement system, so I won't go through those any longer than I already have. Note 7 on page 22. As of right now, we're not aware of any pending or threatening litigation, but if there is, we need to be aware of it so we can include it in this footnote. If I hear silence, I'm going to assume that we're good to go. Yeah. Okay. Page 25 is the budget to actual schedule for the EDC. I mentioned sales tax was outperformed what we were planning. This highlights that. You see we budgeted $745,000 in sales tax revenue. We brought in $184,000. So it's $100,000 more than we were anticipating of revenue coming in. The one thing there, you'll see a negative there under in the far right column for general administration. Some of that is, we didn't plan for the severance package payout to Mr. Baker. That's kind of driving that negative budget variance there. Page 26, I won't cover this in detail, but this is a required schedule on that pension liability we talked about. Page 27 is also a required schedule for the pension.
So moving forward, as we have a secretary, we just go on another employee or change those numbers?
Yeah, it would change up.
Assistant?
Okay.
An assistant?
I did, I'm sorry. Noted.
Page 29, I mentioned at the beginning, we did an audit in accordance with government auditing standards. When we do that, we're required to provide this additional independent auditor's report in there. It's a report on internal controls over financial reporting and compliance. Basically what this report says is, hey, we had to do a government auditing standards report. That requires us to review your internal controls over financial reporting and to communicate in the financial statements if we find weaknesses in the controls of our operations. We do have a couple of weaknesses that we identified with. We'll talk about those in a little bit, but that's what that report states, that we had to review controls. And that we did find some material weaknesses in our reporting. Page 31, schedule findings and responses. This is where we summarize everything. Again, this is a required government auditing standards schedule. Basically summarize the audit results. We're issuing a financial statement with an unmodified opinion on the audit. We do have some material weaknesses. Everything we identify as a material weakness, we don't have significant deficiencies or other non-compliance that we identify. 31 to the end of the report spells out those conditions. I'm gonna table that for now because we have them listed somewhere else. If we could pull out the report that starts, it has the date, June 19, 2019 at the very top. This is a deficiency letter. Where we highlight those comments as well, and so I'll draw our attention here. So on page 2, we get into what we do, material weaknesses that we identified during the year, and they surround two things that happened. The severance agreement payment that we had for Mr. Baker. A couple of things. First off, we overpaid the director by $13,000, $13,280. And some change. I think we rounded for this. It may have been $13,238. I'm sorry, 13,282 or 13,283, somewhere around there. We went ahead and rounded that for this purpose. But what happened? Why did we overpay him? Okay, there was a severance agreement that I think your attorneys worked out with your former director. We went ahead and processed the payment through our payroll system. And that, was it a net of 33,923 to you? That was the net, right?
That was the
Or that was the
that
gross?
was the full gross payment.
That was the gross payment. Okay, 33,923 was the gross payment, but in that payroll process, we had taxes withheld for his benefit. Social Security, Medicare, and FIT, okay? To the tune of 13,280. Sound familiar? That's the amount we overpaid him. So, I'm gonna ad lib here too, correct me if I say this wrong, but I think he complained because he said taxes shouldn't have been withheld.
There were actually two complaints. One, that the amount on the agreement was not the amount of 6 months of his salary.
Right. Should have been $2,800 more, right?
So that was the
Yeah,
one.
that was first,
That
yeah.
was first. And the second was, he didn't believe that taxes should have been taken out of that lump sum payment. He was expecting a check for 6 months severance package with no taxes.
Right. So, okay, let's correct this. We issued another check. 16,113 was that check amount, okay? It was to pay the taxes, the 13,280 that were withheld, plus the 2833, which he should have gotten, right? Instead of the 33,923, he should have gotten 283 more than that. So we threw that into this check. The only problem was, he had already gotten a benefit from those taxes paid on his behalf. There were withholdings made from that payroll run, and we didn't request those back. So he got that reported on his W-2 to his benefit, plus we gave him a check out of AP for 16,113. Hence, we overpaid him 13,280 for those taxes that were withheld from the first payroll check that he got. So, what's our recommendation? It's kind of hard for this recommendation, right? Usually we write up recommendations for things that, this is not a routine transaction, right? So how do you, I can tell you, make sure you follow the agreement, right? That's my recommendation, but there's got to be something more concrete from us on that. My thing is, if you have these special type of agreements, you have something that's kind of out of the ordinary for your organization, obviously you need to get sign-offs from the director, the controller, maybe it comes to the board as well. Certainly your attorney should be reviewing those transactions. That's probably what should have happened here. The attorney was the one that worked up the severance package to begin with. We should have ran through any payments that we were going to do through the attorney just to make sure we understood what we were doing.
That was the previous attorney.
Previous attorney.
Yeah.
Previous attorney.
May I say something on that?
Yes, well, I'm not running the meeting here.
So isn't there some type of mechanics that, okay, you're gonna plug in amount, isn't there something that's gonna say your deductions are taken off?
Formula, you mean?
Yeah. like a formula?
Well, so the first payment, the $33,920, went through the payroll system. The second one was a reaction to the complaint, and let's write him a manual, it wasn't a manual check, but it was in essence a check that we would pay a vendor. So the second check was like a vendor payment to the director.
But the first check was not verified.
The first check went through your normal payroll process, right? So how do we not make this happen?
How do we get this person?
Well, that's the question. Can you get your money back? I think there's some attempts to try and do that. I don't know how fruitful those will be. The department's gonna try it.
The current attorney, city director's office, has submitted a letter. From our last meeting that we had in executive session, I was instructed to contact Mr. Baker, let him know that there was an overpayment. I have done that. And then we have reissued to IRS a new W-2, and the attorney's office prepared a W-2 to inform them, Mr. Baker, that he will be telling that it's income. And we contacted the IRS, and they said they're gonna process this new W-2.
Just for a word of warning, I don't know how, I'm not an attorney, I don't know, we're talking about severance here, I don't know how open this should be.
Do you have a recommendation for the procedure to be used in the future?
Again, it's making sure everyone is reviewing, and when I say everyone, I mean the director, the controller, it probably should come to the board anytime we're gonna issue a check, just to make sure that all eyes are okay with the transaction.
I know, but right now we don't have a procedure, written one.
Right.
So do we need to?
You do, but again, and like I said at the beginning, when you're writing a recommendation for something that doesn't typically happen all the time, it's kind of hard to write a recommendation, right? Because when are you gonna do this again? But you from time to time have these kind of things that don't fall in the normal course of our business. So, you know, if we look at that umbrella, those may happen every couple of years. You'll have something that's a little bit outside the norm, a lawsuit, something like that. It's good to get a procedure in place to deal with that. And my recommendation is everything comes to the board then at that point before we release payments.
This might sound strange, but if there's a $13,000 error, and we owe the city 300 something.
I know where he's going.
You take off 13,000.
Exactly. And I'm advising you as our accountant, is that possible?
Say again, I'm sorry.
To reduce that debt by that 13,000.
And use his laying blame.
That is that's a good direction to approach. I won't bless her or deny it, but certainly that's an option to consider.
You said it was the attorney, made the mistake, is that what you said?
No. The attorney came up with the severance agreement, right? The attorney.
Well,
Which was the original, right?
It was not the attorney.
The attorney does not write the check.
It was not the attorney that pushed
They
the
wrote the
payment.
check based on the agreement, and the amount in the agreement was wrong.
There was no dollar amount in the agreement.
Yes, it is.
There was an agreement, dollar amount.
Yeah,
And that was,
the previous attorney had that.
Yes, it's 32,000 something that it was.
but his employment contract specified what his severance would be
Yeah,
6 months.
in
Right.
But
a
on the,
separation.
but on the agreement, it didn't equal the 6 months. And when we contacted the attorney, and she said make the changes via email, she had the treasurer, Ben, to come initial, the chairperson to come in initial, to say that was a change.
Yeah, we did on the advice of the attorney.
Is this normal for an employee to leave a job with a gross pay?
I believe that was spelled out in the original severance agreement, if I remember correctly,
For gross pay?
for gross pay. Now, that's up to them if they, it's on them then if they're gonna pay their taxes.
Which is why we issued him a W-9, because it said gross pay, and he said, no, that's the taxes. And when we brought it to the attention of the attorney, she said, he's right, we funded taxes, so we refunded him.
We did that to
And
advice
so
of the
now we
attorney.
did the W-2, so we can go back and say that he received those funds, and that IRS said that we have 60 to 90 days for them to process that, but we've already sent Mr. Baker a revised W-2, so that we can get that funding back from the IRS
So
to
that-
credit the FEDC.
Okay, let me see if I'm correct here. We paid him $33,923, is that correct?
Yes, sir.
Then we paid him an additional $16,000,
That's correct.
and then we paid him an additional $2,800.
No, the
No,
16
the
is
the 28,333 is
the
in that
addition of-
16,113.
was the taxes plus the.
Okay, so 33 plus 16, that's 49.
You see, the 33,000 is actually the deduction from the income tax and social security or whatever have been taken out. So the total gross amount will have been more than that, minus the taxes. Then he's probably say, no, wait a minute, you shouldn't have given me 33. You owe me those 13 because I want the gross amount. So depends how the contract is written. So we issue a check, go ahead and issue a check for the difference, but meanwhile, we already have paid his taxes for him.
Yeah. But I'm saying even the gross amount, 33 plus 16, that's 49,000.
He wasn't making 100.
I think the proper one was the 33.
With 13 over, bring it down
Yeah,
to
13 over, yeah.
3600.
Yeah, he should have been given a check for like 36,700 or something like
So
that.
the
There's a
agreement-
33 and the 28
So
were
the
correct.
board, the
Yes.
board approved $33,923.04. That's what it said on the agreement. But what it should have been was $36,750, which is 6 months of his 735.
The other 280,
So the difference was $2,826.96. So that was the first off. Okay, so when we did the taxes, then they did the taxes and we paid the taxes, so that's the overpayment reference is the taxes that, when we gave him back that other taxes and we did it based on the direction of the attorney. So that's what we've gone, I have it in the email.
The email does not say that. The email says if the counting is correct, I've seen that email. That's not what the email says. After the comptroller has verified it, write the check. The attorney does not say write this amount of check. The attorney does not say that.
Yeah, it was my understanding that the amount was not
Yeah,
specified.
the attorney doesn't say, okay, write the check for this amount.
So we requested.
If you have that email, show it to me.
Okay. The email says, following our conversation with you and the chairman of FEC, Mr. Lambert, regarding the final payment from Mr. Baker, the amount of $33,923 does not reflect the correct amount. Mr. Baker's salary was $735. A 6-month payout should it be equal to $36,750. Please advise if you approve a lump sum to be amended to be $36,750. I apologize for any inconvenience. She said, that was me asking the attorney.
Right.